Ever imagined having trades set up that gives you the best signals and allows you to profit from it with ease? Well, in today's video, we will be going over a zero-risk strategy that gives the best buy and sell signal. You don't have to sit on screen waiting for your conditions to be met. The conditions are very simple as: get signal alert, open your MT4 or MetaTrader 5 platform, input your entries and profit from it. Yes, it is that easy. This strategy was sent on mail by our top subscriber. Credits to James Robinson. Let's now go over the strategy that was used. Okay traders, before that, I guess we should go over the mail a little bit, as it might inspire you as well in becoming a profitable trader. Now this was the first mail we received.
Hi Trade Beta team. Much love from James Robinson. I reside in United States and a big fan of your channel. Thanks a lot for all you've been doing. Your videos are great and it's helping me become a better trader. I have backtested a lot of strategies you post on your channel on different trading pairs, and my honest review is this. Most of your strategies are profitable on some trading pairs and lose so badly on some, as it made me realize that all commodities have different waves and trading patterns. The RSI indicator alone could make 85% return on investment on the Euro-United States dollar in a week and have 75% account drawdown on the British pounds United States dollar in the same week. Currently, I use 4 strategies on your channel on 4 different trading pair, and funny enough, they are not among the top 5 strategies on your spreadsheet. I recently added the United States dollar Japanese yen pair to my trading arsenal. Initially, I set a course to create a strategy that works on all market, but couldn't. Not until early November last.
Now because of time, we won't be going through the whole conversation. But you can pause and read on if you would want to know the outcome of the chat. So we are on the United States dollar Japanese yen. To understand the strategy, let's go over the indicators used and how the strategy was applied. If you are enjoying this, why not smash the like button and subscribe, as it motivates us on the hunt for the Holy Grail. Now for the first indicator, bring up the indicator panel. I want you to search for the half trend. This one right here by Everget. This is a popular trend indicator based on ATR. Similar to the super trend, but uses a different trends identification logic. Now let's adjust the settings for the indicator. Double-click on the indicator. On the input, change the amplitude to 9 and the channel deviation to 14. Then on the style, untick the ATR high and ATR low. And that's all for this. Now for the second and third indicator, please watch closely, as one single mistake could ruin your trading. Now for the next indicator, click on Compare Indicator to add a second United States dollar Japanese yen. Now click on this button, click on Move To, and select New Pane below. Now we have it as an indicator. In case yours is not displayed as a line chart, then double-click on the indicator. On the style, make sure it is online. Click on the OK button to apply the settings. Now for the last indicator, we would not be adding it as a normal indicator, but rather tagging it to this United States dollar Japanese yen indicator. And to do that, click on this button. Make sure you click on Add Indicator/Strategy on the USD/JPY. Search for the whole moving average. This one made by Tradingview. Add it to the chart. Now when you do, it takes its reading from the USD/JPY. That's not all, as we would now adjust the settings. Double-click on the indicator. Let's first change this to white. Now on the input, the length should be 21. Then change the time frame to 4 hours. And we are done with the settings. Before we go over the entry rules, let's first go over the errors to avoid, as a lot of people tend to skip these errors. First off, when you get your entry signal and you place your trade, if the trade does not trigger and gives an opposite signal, Close the trade and wait for your conditions to be met before we open a new trade. Then secondly, the work of this cloud is to prevent us from taking trades when an engulfed candlestick occurs. When you get an entry signal and the lows of the candlestick is below this cloud, avoid taking the trade, as we only enter trades when it's still inside the cloud. Exactly the opposite for long trades. Now for a buy signal to be valid, we first need to see the orange moving average above the white moving average. When we have this, we would then wait for a new blue arrow that indicates a buy entry. When we get our entry, we would now have to place a buy stop order at the peak of the trigger candlestick. Stop loss at the half trend moving average, while take profit is at 2.1 times the risk. And we see it was successful. It's that easy, right? Please always check this confirmation setup, as it is the key success to this strategy. Now we can see we got a buy signal here, and the confirmation setup is not confirming the signal, as we have it below the white hole moving average. We would therefore skip this trade. Exactly the opposite is true for a short trade. For a sell signal to be valid, we first need to see the orange moving average below the white moving average. When we have this, we would then wait for a new red arrow that indicates a sell entry. When we get our entry, we would now have to place a sell stop order at the bottom of the trigger candlestick. Stop loss at the half trend moving average, while take profit is at 2.1 times the risk. And we see it was successful. Here is another buy signal we would have taken. So we see we got a signal to go long here, and we can see we have our moving average above the whole moving average. We would therefore enter trade at the peak of this trigger candlestick. Stop loss at the moving average, while take profit is at 2.1 times the risk. And we see it was successful. Here is a sell signal we would have taken. So we see we got the signal to go short here, and we can see we have our moving average below the whole moving average. We would therefore enter trade at the bottom of this trigger candlestick. Stop loss at the moving average, while take profit is at 2.1 times the risk. And we see it was successful. Okay traders, let's now go over the backtest to confirm if it will yield the same result as James claimed. We would be using an account size of $1,000, as well as risking 1% of account size on each trade. Let's dive into it. Okay traders, we just finished the back testing for this strategy, and we can see the results are amazing. But here are some important tips to take note of. This strategy worked because the pair has a good history of trending market. The 4-hour chart trending most of the time, as it enabled the easy consecutive winning trades on the 5 minutes time frame. Also expect to see some amount of drawdowns when the market is ranging. This strategy made 184% return on investment within 3 months. And the win rate is fair enough for a 1:2.1 risk to reward ratio, as it made 62% win rate in 200 back-tested trades. So I definitely recommend using this strategy. Okay traders, that's it for today. Thanks for watching and see you in the next one.